which netted me a profit of $19.54. In this video, I'm going to go over all of the trades I took in January, executed on my mobile phone using the divergence entry system while still working a 9 to 5. Hi, my name is Mfon and I'm here on this channel to share my experiences as a beginner forex trader. Before I get into the meat of the recap, I would like to go over all of the rules and criteria I look for before executing a trade in the market. In these two videos, I go over how to trade the strategy in details, especially the video on the divergence technical concept, which is a major component of the strategy. Feel free to check it out after this video, but I'm going over the rules again because I want you to understand what I will be saying during the recap. So without wasting much of your time, let's get started. The strategy is traded on the 15-minute time frame, and the first rule I look for is the positioning of the moving averages. I use 5 exponential moving averages, which are the 8, 21, 50, 200, and 800 exponential moving average to determine the direction of the trend. So an upward trend would obviously mean that all moving averages would be sloping upward and vice versa for a downward trend. The second rule that I look for is the positioning of the sentiment line in the TDI. The TDI is nothing more than the trend directional index. It's the combination of the 21 period relative strength index and the 34 period exponential moving average. So the third rule that I look for is an Asian session breakout, either below or above previous day's highs or low, depending on the direction of the trend. The fourth rule that I look for is there shouldn't be any bearish divergence in an uptrend and a bullish divergence in a downtrend. That is why I would recommend you go watch that video on divergence so that you can understand the technical concept. The fifth rule that I look for is context on the 1 hour chart. And when it comes to reading price action, it takes time and experience. So I created a short video on how to understand price action in 5 minutes. I would leave a link in the description box below. The sixth rule that I look for is that prices should not exceed the ADR. ADR simply means average true range, and that represents the amount of pips a currency pair can move in a single trading day. So executing a trade when prices has exceeded the ADR is a low probability trade to be taken for a day trader. So the seventh rule that I look for is a pullback to previous day high or low in confluence with the 50 exponential moving average, and I simply wait for the divergence entry signal on the 1 minute chart before I execute my trade. And the last rule I look for is long-term trends. This rule, I don't particularly pay attention to it, but it adds a little bit of layer to the probability side of things. So the way I determine long-term trends is by using 2 exponential moving averages, which are the 8 and the 21. If the 8 is above the 21 and prices are particularly above the 21 exponential moving average, that indicates an uptrend. Vice versa for a downtrend. If the 8 exponential moving average is below the 21 exponential moving average and prices are particularly below the 21 exponential moving average, that indicates a downtrend for me. So guys, the first week of January was quite slow, probably because we were just returning from the Christmas holiday and it was also NFP week, the non-farm payroll, which measures the rate of unemployment in the US economy. But on Friday of that week, a trade setup presented itself on Euro Swiss franc pair. The setup met all of my rules and criteria, but I did not execute a trade on that pair because it was NFP release date, which via historical evidence is always a slow trading day until the release of the news. So I decided to just hold my hands and not take the trade. The trade still ended up moving in the direction I expected based on the system rules. My first trade was on the pound card pair on January 12th. Now let's analyze the setup based on the rules. Lest I forget, the trading rules are also used as a benchmark for grading the setup. So I grade the setup using the conventional grading system of A, B, C, and D. I particularly like avoiding all these setups because they are low probability setups. Setups are graded by the number of rows that the setup meets. For example, if a setup ticks all 8 rows, that setup is graded an A setup. If 1 or 2 rows are omitted, that's a B setup. If 4 rows are omitted in the trade setup, I grade that setup a D trade setup. Now going back to the trade, I particularly liked the positioning of the moving averages all sloping downward, with the 50 EMA below the 200 EMA and 200 below the 800 EMA. The 8 and the 21 EMA are short period EMAs, so it's not unusual to see the 8 cross above or below the 21 EMA depending on the direction of the trend. But upon entry of the trade, I would love to see an immediate cross of the 8 below the 21 EMA, considering we are analyzing a downtrend. The second thing I look for is the direction of the sentiment line, which is the blue line embedded within the 21 period relative strength index. As I said earlier, the TDI is the combination of the 21 relative strength index and the 34 period exponential moving average, and it has to be communicating the same bias as the moving averages. If the sentiment line is below the 50 area of the RSI, that tells me the market bias is bearish. Above the 50 area will tell me that the bias of the market is bullish. Now that the trend and bias are established, the third rule will be an Asian session break below the previous day's trading low. I use a period separator so I can easily identify the highs and lows of the previous day trading session. As you can see here, markets did not break fully below the previous day's low. The fourth rule I look out for, considering the bearish sentiment, is the absence of a bullish divergence. In simple terms, divergence is when the price of an asset is moving in an opposite direction to an oscillator, such as the RSI. So a bullish divergence is when prices are printing lower lows while the RSI is printing out higher lows. This simply communicates to me that a change is likely to occur rather than a total market reversal. The fifth rule I look for is price context on the 1 hour chart. Like I said earlier on, it takes time and practice to fully understand price action structure, context, and order flow. But the basic thing I look for here is that prices on the 15-minute chart should not be trading against major support and resistance level on the 1 hour chart. In this trade, I liked the price action context on the 1 hour chart as price found support at the 171.34.8 area 3 times before breaking out of that level. The sixth rule that I look out for is the positioning of current price action relative to the ADR. That is the average true range. I use an ADR indicator on the TradingView app that automatically calculates price movement over a 7-day period and plot the average price movement in pips indicated by the green line on the chart. What I'm looking for here is that price should not exceed the ADR, which will communicate to me that what the current pair has to offer for the trading day is exhausted. At this point in the trading process, I wait for pullbacks to previous day's low in confluence with the 50 exponential moving average before switching to the 1 minute chart to wait for the divergence entry signal before executing the trade. I graded this setup a B setup because price did not break out fully below the previous day's low, and the trend on the daily chart was bullish, communicating a different market sentiment to the 15-minute chart. As seen on your screen, I will place it either by the right or the left side. I haven't really decided yet where to place it. My entry was at 171.31.2 level with a stop at 171.55 level, and my target was at 170.92.1. So approximately a little over 2-hour reward to risk ratio on that trade, which netted me a profit of $14.96. My second trade was on the Euro Aussie pair. On this particular setup, all moving averages are sloping to the upside, communicating an uptrend, with the sentiment line above the 50 area of the RSI communicating bullish sentiment. On this particular setup, I love the total Asian session break above previous day high with the absence of any bearish divergence because the trend is bullish. The context on the 1 hour chart was very clear as prices was bouncing off a roll reversal area of 157.28.5. Roll reversal areas are just former support area turned resistance and vice versa. So prices found resistance at that level, broke out, found support, broke out again, found resistance, and finally broke out, and now it's finding support once more. As at the time of entry, prices had not yet exceeded the ADR, so I waited for a pullback to previous day high in confluence with the 50 exponential moving average, switched over to the 1 minute chart and waited for the divergence entry signal before executing my trade. I also loved the fact that long-term trends were all bullish with the trend on the 15 minutes time frame. So this is a typical A plus setup. As seen on your screen, my entry was at 157.48.6 level with a stop loss at 157.24.8 level, and my target was at 158.071 level. So approximately a little over 2.4 reward to risk ratio on that trade, which netted me a profit of 1954 bucks. My third and fourth trade was on the pound card. Again, you would notice by now that I'm always repeating the same process on all of my trades, because when you're day trading and working a 9 to 5 job, you just need to find a systemic method which removes most of the emotional and discretionary judgment from your trading. As seen on your screen, all moving averages are sloping to the downside, communicating a downward trend, with the sentiment line below the 50 area of the RSI communicating a bearish sentiment. Prices broke below previous day's low during the Asian session. There was a bullish divergence where prices were printing out lower lows and the RSI were printing out higher lows. Price action context on the 1 hour chart was super clear. The very kind of context I like seeing, where price were printing lower lows and lower highs, communicating a downtrend with a break below the 170.66.2 area. As at the time of entry, the pound card had not yet exceeded the average true range for the day. So I waited for the pullback to previous day low in confluence with the 50 exponential moving average, switched over to the 1 minute chart and waited for the divergence entry signal before executing my trade. I graded the setup a B setup because of the presence of the bullish divergence, and the daily trend was not bearish as at the time of entry. As seen on your screen, my first entry was at the 170.64.3 level with a stop at 170.87.5 level, and my potential target at 1,761 level, which was approximately a little over 2.5 reward to risk ratio on that trade. I closed half the position at 1 hour, then trailed stops to mitigate risk, and prices knocked out my stops for a little loss of 0.95 bucks. But the thing about this particular setup is that the divergence entry signal on the 1 minute chart wasn't broken, which prompted my decision to take a second entry on that setup, which netted me a profit of 17.13 bucks. This video is sponsored by the like button, so if you have found value up until this point and have learned something new, please do me a favor and poke the like button, because it helps with the YouTube algorithm spread this value to other people who are interested in this kind of content. On this trade setup, I allowed my confidence to get the best of me with 3 winning trades in a row and 1 minimal loss. I really thought nothing could go wrong, breaking one of my unwritten rules, which is after a large impulsive move, either bullish or bearish, followed by a divergence. In this case, a bullish divergence. Via my findings from backtesting, markets are choppy most of the time when this pattern occurs. The setup ticked all the other rules, but the presence of the bullish divergence after an impulsive bearish price move made the setup a low probability setup. Ignoring all the signs, I took the trade and ended up losing 1142 bucks. I had a missed opportunity on the pound USD pair due to the fact that I hesitated. This sudden hesitation was because I felt frustrated for not following my rules, which led to the loss on the Euro Swiss franc pair. I was trying to be careful not to lose money again, and that led to my indecisiveness. And the thing is, markets do not wait for your indecisiveness. After that disappointing trade, I was a little hard on myself for not following my unwritten rule, which affected my performance on this next trade on the New Zealand dollar Japanese yen pair. All criteria were ticked. Moving averages positioned well, sentiment line below the 50 area of the RSI communicating both bearish sentiment and trends. An Asian session break below previous day's low. No presence of bullish divergence. ADR had not been exceeded. The price action context on the 1 hour was bearish. Then prices pulled back to previous day's low in confluence with the 50 exponential moving average. Switched over to the 1 minute chart, found the divergence entry signal, took the trade, closed half the position at 1 hour, and immediately locked my stop to break even so I would not lose the little profit I made in hopes of making back the money I just lost, which is absolutely not the right kind of mindset I should be possessing as a day trader. From then on, prices knocked out my stops, consolidated a little bit, then moved in the initial direction of the trade. I ended up netting a profit of 0.75 bucks. My last trade for the month was on the Australian dollar US dollar pair. All but one criteria was ticked. The only omitted criteria was the presence of the bullish divergence. Feeling really composed that day, I netted a profit of 1963 bucks. So my goals moving forward are basically process goals, which are to focus more on high probability setup and to get rid of the mindset of always trying to make my money back after a loss. As always, if you found any value and learned something new, please give us a like to assist us with the algorithm, and make sure you hit the notification button to stay in touch whenever we release a new video. Until next time, MMI out.